Oh, you better watch out. You better not hide. If your doors are open, we're coming inside.
Harry
And Marv
are coming to town. We know when you're out dancing.
We know just what to take.
We know where all the money's hid.
So come on, give us a break.
Oh, you better watch out. You better not hide. If your doors are open, we're coming inside. Harry
And Marv
are coming to town.
Good morning, ladies and gentlemen. I welcome you to Thursday, December the 19th. It is just a little bit past 5 a.m. on the East Coast. And as you see here on your screen, we are looking at the U.S. SPX cash estimated price to the open, which is 58.9680. We are up 24.6 points, 0.42% at the moment. We still have another 4 hours to go before the market opens. I'm kind of just going to do a little recap as we go over. As yesterday, we opened at 60.47. We made it up to 60.70.67, almost filling the gap from Monday. And we abandoned the 5900s and went into the 5800s. I spoke about this quite often. This is QUAD OPEX week, December 11th, 18th window, which has the 60.92.59 placement. Talked about what's happening here with the FOMC. The font was a little bit screwed up as we went through here, but that was your weekend email. I sent this out back in the early part of December and made sure that everybody had a copy of it. And we sent out other alerts, as you know, like here, as you see, which was in your email multiple times during the past few days, talking about the March 21 QQQ 500 puts, which I am in, and the ability to go out to January 17th, February 21, or March 21, and the prices that you have there. We also spoke about, as we go over that same thing, which was in the emails, where I mentioned here multiple times, multiple emails over the few days, that I, blue sequence underwear, pronouns that I'm currently going by, Joe Biden still in office. I, blue sequence underwear, am extremely expectant of the 60-50, 60-35 test, which would make December negative, being below 60-40, and set up for the move into the wave 4 drop, into QUAD OPEX, FOMC, full moon, down to 58.50, plus or minus 25 points. As you see yesterday, as we did get that minus 1%, it is off the books. We only made it to 58.67. 58.67, 58.50, plus or minus 25. My job is done. And how that job was done was, as you see, started the week out buying the December 20th QQQ 530 puts. Those went 504% yesterday. Started out with the explanation about letting everything do what it would do. Set your alarm for 1 o'clock. Be ready for the FOMC come 2 o'clock, 2:30. The 60.35 puts were back again at 4:30, and the 6,000 puts were down at 75 cents. Well, they closed at 124.90. So your $75 of risk potential, if you wrote it all the way, which I thank you very much for that opportunity that you provided for me to do that, $75 to $12,490 for each contract. And I set out because I had shown in front of me, in front of my own two eyes, a few people in real life businesses that took $100 and turned it into 10 grand. We've watched these reality shows on TV about the undercover CEO, undercover boss, that do something similar over a period of time. But I've watched people actually do this, mainly ticket scalpers at major events, major concerts, major sporting events when I was younger, prior to being a broker. I've done quite a few option trades and alerts, which have done 3,000, 5,000%, but this is by far the biggest one that I have ever sent out, and I thank you for the opportunity provided to me to be able to do that, as it was there at your 1 o'clock leisure. The 6035 puts are again at 430. The 6,000 puts are at 75. The 6100 calls at $1.25. And like I shared with you in the email, whichever one doesn't work, fuck it, let it go, because the other one's going to pay for it. Over here on Friday of last week, 2 weeks ago, apologize, not last week, 2 weeks ago, December 6th, the December 20 SPY 600 puts 216. The December 20 QQQ 520 puts 315. Well, the QQQ having been suspended and having gone extremely higher, they only doubled. They only went to 754. However, your SPY 600 puts from 216 up to 515, you do the math on it. But there again was your 6035 puts where the smarter money would go, buying relatively close, not taking the gamble on that minus 1% move, which we obviously got. The 6035 puts from 430 went to $16,506. So $430 to $16,506. So I thank you for that opportunity to have been able to not only be engaged and involved together with you, but to offer you the opportunity that you could make a better life for not only you, but for other people that are around you. And that's why we do this, because you're going to get a quad OPEX every 4 months, and you're going to get an FOMC meeting 8 times every year. So once again, I thank you for that opportunity, because we've dropped on the QQQ significantly, over on the IWM and on the Dow. We've completely retraced the entire Donald Trump rally. It's gone. We actually broke down below 220 on the IWM, and the IWM being the primary indicator to tell to everybody, hey, the market's not doing as good as you think it's doing. So bring on to the futures. And futures here, as you see, your big drops came out right at 2 o'clock yesterday, and kaboom, kasplat, kabam. We are off the lows as we move into the beginning of the morning. Off the lows on the Dow, which has almost completely retraced the Donald Trump rally. We are updated chart on the NQ. We made it right to the 23.6 retracement to the September lows, and we just barely missed the 23.6 retracement to the July lows, if you recall, when the NASDAQ sold off almost 17%. Not bullish. And where we dropped to was exactly minus 5% on the futures having been advanced with this OPEX gap, which we can now remove. And over here on the ES as well, the OPEX gap has been removed from the weekend. A fall just greater than 3%, right down to that 59.27.25, right down to the 23.6 retracement. Show you here, on to the August lows, which, as we know, are our lows. The Russell 2000 has completely filled the Trump gap and has taken a complete shit as it has fallen down. So leaving you off with here, I'll bring you on very quickly to the charts, because again, on your email, you're going to see a very simplified version of today, because you have tomorrow, and tomorrow is already here in front of us. The wave 4 that I was looking for down in this region, 59.30, down into that 58.25 area, well, we made it, like I showed you, within 22 points of where that target was of 58.50. Can we go lower? Absolutely, yes, we can go lower. I don't expect us to be going lower today because of, again, the algorithm. The algorithm, which I've shared with you multiple times. I've shared it with you in your charts. I've shared it in your emails. I've shared it to you in the spread room. It's again in your email for today, that being the algorithm of today. The VIX, major move, explosive move, almost to the October 2018 highs. and the big gap down that we've had here overnight, and we are back down below 2102. So this here is your second hint that the algorithm that we spoke about is going to be in play for today. Come over onto your NASDAQ, which I have not updated my Fibonacci's as of yet on the NASDAQ. I've got a little bit of too much work to do, and I've only had 2 hours of sleep each day this week. But the gap that we made back here on December the 3rd, it's been completely filled. Boom, boom, boom. We came down here to 512.08. I'll pull it back up just to make sure that everybody has the same data that I have. The open for the month of December, 511.01. So NASDAQ almost, QQQ almost went negative on the month. Bring you over again to where we are with the Russell 2000. The Russell 2000 having completely filled the Donald Trump gap. It's completely gone. We are down below the 2022 top, which I ask, please have a look. Look at your chart. We are below the 2022 open, which again, I ask, please go and look at your chart. There is nothing whatsoever that is bullish about the Russell 2000. In fact, bringing it on here, we are hindering on that big 213 area with the big gap that's down there below that 213 and the 200-day moving average, which sits down below. But again, I do not expect that to be taking place today. Come on over onto your Dow Jones, and your Dow Jones having almost completely retraced the Donald Trump gap up. We're in nothing bullish whatsoever when it comes to the Dow Jones, and the Russell 2000 is supporting it as well. I bring you here onto the TLT, which I have been screaming and hollering about for weeks. Here we are, down at the 2009-2010 support area, where we broke down back here in April, which, if you recall, back in April was where we had the major sell-off on the markets. We did not have that sell-off as we came down here into the election, prior to post-election. And what this is telling you here is that rates are going higher. You're getting a major inversion on your 3-month and the 10-year, and it's not good. It is not good for anybody who thinks that they're smart, and especially for a comment that I saw going back a couple days ago where somebody said, I can't wait for a major sell-off so that I can begin selling cash-secured puts on the major tech QQQ names. You're going to fuck yourself, just like I told Paul. Get out of AMD. AMD calls are not the trade to be in. Get out of it. You are fucked. He decided to be smarter than me, and he's paid the price for it. And I'm not pulling you out, Paul. But again, I do this for you. I don't do it to be right. I do it for you because I'm thinking about where is the best place and safest place for your capital. Not mine. Yours. So here we are with the Japanese yen, and the Japanese yen making that move up here to that 157.70. Not good. Not good. As you see, which I think I have here on the other chart, which is the DXY, the dollar, breaking up above 107, 117.8 yesterday. Not good. Nothing here is bullish long term. And your play will continue to be on the Russell 2000. So again, here on the Russell, this can be removed. The entire Donald Trump rally has completely been eliminated, as well as that gap. There are virtually no gaps to be filled to the upside. I know that there are a couple, very tiny ones, which I'll update over the weekend, but we are not in a bullish market. Period. The end. Despite the move that we have had since Donald Trump was announced president. So again, this is where we're at. I still see this as being an ABC, a bearish bounce coming off of that August low, but it doesn't matter what I see because we trade the price action. And the price action clearly yesterday, having broken down where we broke down below, we have taken out a large number of long positions. So what we're looking at today is a bounce back up to around 59.22, the 50-day moving average. possibly seeing that bounce back up to 59.31, 59.35. I would not hold my breath on 59.56, but I definitely would expect to see a visit to around that 59.22, 59.31 area. So again, I really only have one other thing to leave you with.
I just got three things to say. God bless our troops. God bless America. And gentlemen,
I'm an American badass. Watch me kick. You can roll with rock or you can suck my dick. I'm a porno flick. I'm like Amazing Grace. I'm gonna fuck